Hello. It's been a really long time, I know. For those of you who are watching me for the very first time, hi, I'm Disha Shah. I create videos on how to make, save, and invest money. For, for those of you who are coming back, I know it's been a while. I did a lot of traveling in 2023 with my startup job, which got quite hectic. Even though I did a bunch of solo traveling and I really wanted to create content and capture the things that I was doing, I realized when I was traveling, I just wanted to experience it for what it was, and I didn't feel like picking up the camera. And so I listened to my body and I didn't pick up the camera, and it was the best time ever. Having said that, I have been itching to get back to filming, and so I'm back. Hopefully, this time no breaks. Not because it's a bad thing, but I think I'm in a space where I'm learning to balance between travel, work, and creating content, because all of it feeds my soul in different ways. And I also have been doing so many different things with my money, trying different things out. My priorities from last year have changed, and so I wanted to share what I'm going to be doing for the financial year 2023 to 2024 in terms of my steady investments that don't change, which is systematic investment plan (SIPs). If you don't know what SIPs are, I have made a video, so I will leave a link to it on the I or in the description down below so you can check it out. Uh, but yeah, I'm excited to be back. If you don't follow my Instagram, I will be active there also. You can send me questions there. It's much easier for me to answer questions there, so make sure you follow me there. And without any further ado, let's get into the video. SIP or systematic investment plan has gained a lot of attention in the personal finance world for its numerous benefits. But I think there is a common misconception. When a lot of people think of SIP, they think of it as a financial product on its own, but it is not. It's rather a method of investing at regular intervals of time. So you can pick a financial instrument like mutual funds, and you can pick a date of investment, how much you want to invest and in which fund, and it regularly allows you to do it. Sometimes it's also automated, so you don't even have to think about it, and every month on that particular date, that investment goes through. So there are two ways of investing in a mutual fund. One is lump sum or one time, and the other is SIP. Picking SIP has numerous benefits like power of compounding and possibly higher returns in the long term, rupee cost averaging. I go into more details of advantages of SIP and difference between one time and SIP in the below video. I will leave a timestamp in which I explain it. So if you want a more detailed explanation, do check it out. Now let's get into how I invest. Usually when making a money decision, I decide on three goals for my money. Last year was very clear. The first was to experiment and learn with as many financial products as possible to gain confidence and understand what products I'm comfortable with and I want to incorporate in the long term. The second was to observe my relationship with money and understand what I wanted my money to do for me. This really helps in decision making and understanding, or rather prioritizing my money goals, which I knew would come in to play the minute I started thinking of long term plans. The third one, and this is a rather important one, is to trust my intuition when making financial decisions rather than being limited by traditional gender roles that say that women are not intuitive with money. I think for a very long time we have been told that we need a male presence in our life to make financial decisions. And I refuse to believe that, and there's plenty of evidence to call the BS on that. Um, but to unlearn that kind of means to start making those decisions and to start trusting your gut. I started off with the smaller decisions, and the experimenting and learning with different financial products really helped me gain that confidence to trust my instinct. So start off with smaller decisions and then move on to bigger financial decisions. So those were the three goals, and I was very happy that I think I always had that intention when making a financial decision. But this year, I think my priorities have changed. So this year, my three goals are: the first one is to build security. When shit hits the fan, I want to know that I am financially sorted, and so I can spend my mental and emotional bandwidth in solving the problem and thinking of the next steps for the problem. I think financial stress added to any other stress in life is just too much. I have seen it firsthand and don't like it. And I know I want to feel safe, and that's a very important part of that's a very important role that my money has to play in my life. The second one is wealth creation. I think we've heard enough books and finance influencers throw the word compounding on our face. I think it's time to put it to use. I want to kind of start setting a base to long term wealth creation, start building towards whatever that means for me. The third is spending money where it matters. I think my first year of earning money, I was extremely excited, was feeling really abundant, and said yes to almost everything that came my way, which was a beautiful experience on its own. But upon reflection, I do feel like there were many places that um, I spent on things or experiences that didn't serve me or didn't make sense to my life. And I would rather direct it towards something else. So, having learned that, I think this year I really want to see if I'm able to be more comfortable in where I've spent money upon reflection. Yeah, so those are my three goals for this year. As always, I want to give the disclaimer that I'm not a financial advisor. None of this is meant as an advice. I am simply sharing what I am doing in the hope of inspiring and continuing the personal finance dialogue between young people and women, especially. So please do your own research before investing. You can just use this maybe as a blueprint or guide. Mix it up. You don't have to have 6 SIPs if you are well and happy with two, three, or two, or even one. That's okay. Um, the point is just to kind of start somewhere and proactively make decisions as your priorities and goals change in life. Okay, now let's get into what this video is really about, on how my SIPs are going to help me achieve the goals that I've set for the financial year 2023 to 2024. I have my laptop here just so that I don't go wrong with any of the numbers, but my first two SIPs are dedicated towards the security goal and building up stash. For me, at least, the goal is to build at least 12 to 16 months worth of my expenses. So while picking mutual funds for this goal, I had two things in mind. The first one was no exit load, because I knew this was going to be sort of an emergency fund that when shit hit the fan, I would need access to it immediately. I did not want to have to pay any fee while redeeming my investment. So it had to have no exit load. The second one was it had to protect my principal amount, which means I didn't want to take too much risk with this investment, because if I had to pull the money out or redeem it in an emergency, I didn't want to have to worry about whether the market was up or down. So I picked two mutual funds and they account for 37% of my investments. The first one is Aditya Birla Sun Life Corporate Bond Direct Fund, and the second SIP is in Quant Liquid Fund Direct Growth. I'm looking down at my dashboard. So every month on the 5th, these two SIPs run for me and go towards my security goal. My third SIP is for wealth creation, and a big part of wealth creation is tax planning, babe. So under ATC, you can invest up to 1.5 lakhs in any tax saving instruments like ELSS, PPF, um, Employee Provident Fund, etc. And that 1.5 lakhs will be reduced from your taxable income. So you have to make use of it. So last year I made the mistake of starting late, and then I had to make a lot of investments to cover up for it in January, February, and March. And I didn't want to do this. So I wanted to plan it out in a way that I hit my 1.5 lakhs correctly within the financial year, in a way that I'm investing little every month instead of bulk amounts. So the ELSS fund that I picked, and I've literally been investing in this for more than 3 years, even before I started working, just as an experiment. It had good returns. I started there, but I really haven't looked elsewhere after that. I have picked it's the Mirai Asset Tax Saver Fund Direct Growth and accounts for 38% of my investments. My next three SIPs completely go towards long term wealth creation for sure. They are more risk, more reward, and I plan to stay invested in them for at least 5 years or more. So I am okay taking that kind of risk. Plus, my first three SIPs go towards tax, which has a 3 year lock in, and savings. So the base is sort of covered, and I'm willing to take the risk with the rest of the money. So the other 25% go in Parag Parikh Flexi Cap, all our direct, all our growth funds, PGIM Mid Cap Opportunities Fund Direct Growth, and Quant Active Fund Direct Growth. That's it. If you stayed till the end of the video, the highest in me recognizes the highest in you. I hope you enjoyed the video. If you did, please hit the like button. Please let me know in the comments down below what SIPs you have running, which funds, and for what reasons. I think it'll be great learning for everyone. And if you enjoyed this video, send it to your girlfriends. Make sure that women are actively looking at financial content and making financial decisions. So share with your friends, family, and I will see you again in my next video.